right, good afternoon. Welcome everyone. We've invited Adam Myers to assist us with our presentation this afternoon. Adam's been working with us for some time, and he's part of the Master Builders Association Insurance Division, and I know Adam, I'm sure, looks forward to this time of year every year where we renew the policy, which I'm sure is fraught with lots of challenges. So firstly, thank you, Adam, for working closely with our group now for a number of years, and the value you bring to the group. Craig, you're front and centre there with your camera, so maybe you just want to turn that camera off, and that'll leave Adam and I as the presenters. So what we're proposing to do with Adam this afternoon is not bore everyone to tears by talking through an insurance policy. I'm sure you're not here to hear that, but we're just going to try and understand some of the common misconceptions about the insurance policy we've got, how to approach it when you've got a claim, what to do, what not to do. So that's going to be the theme of our presentation this afternoon. Adam, I'll go ahead with a screen share. Maybe you can introduce your role at Master Builders Association.
No dramas. Thanks, Glenn, and thanks for having me along today. So I've been within insurance for probably about 15 years or so now. 10 of those have been spent with Master Builders Insurance Brokers. My role within Master Builders Insurance Brokers is I work within the corporate team. So I specialise in a whole bunch of range of programs and insurance products, not just the contract work side of things. And I bring, I guess, the years of experience that I've had working for Master Builders and multinational insurance brokers along to the role.
Good. Well, you've certainly improved the quality of our insurance representation since we've been with you, so thanks again. Now, Adam, just looking at this PowerPoint you've prepared, we've renewed a contracts work policy, being the core product that we get from you every year. It covers these things here in the center of this slide: storm, fire, flood, theft, malicious damage, and accidental damage. Mm-hmm. What doesn't it cover? And I know you have a slide on that, and I'll just flick to that now.
Yeah, definitely. So I guess that first point there is probably the most important to be aware of when we're talking about contract works insurances themselves. So when there's a defect within a policy or faulty workmanship, most insurance policies exclude that. So they exclude that as part of the claim costing itself. However, from a liability perspective, the resultant damages that arise out of those defects are picked up. But what you can see in the line there that it talks about only the smallest component part. So whereas most insurance policies will look to exclude all of the defects and defective components, the Chase policy itself will look for the smallest component part to exclude and pick up all the other costs.
Can you give me an example, please?
A real basic example would be, we've had a claim in the past where a screw was accidentally screwed into a water pipe itself. And so the initial damage was not necessarily known. It wasn't until over time that the screw itself rusted and allowed the water to escape from the pipe that it then went on to cause water damage to ceilings, floors and walls, which we consider third-party property, and a claim was then lodged. So as part of the Chase policy, the smallest component part ended up being, or the defective part, was the screw in the pipe. So the cost that was excluded as part of the claim was the replacement of that screw itself. All the other costs were covered itself.
Okay. Well, that seems like a very reasonable position for an insurer to take. So that's pleasing, and clearly these other things here speak for themselves. So liquidated damages are not covered.
So misappropriate embezzlement funds within the project, the cost to recover those aren't. Well, for acts of damage, wear and tear. The line there, mechanical and electrical breakdown for plant, machinery and equipment. So there is cover for damage and theft for plant, machinery and equipment under the policy, but not from wear and tear and breaking down. That would be separate insurance. But if the machine is damaged or stolen, then it is picked up under the contract work side of things. And asbestos itself is a general exclusion under most policies. So I guess if anyone's looking to kind of get into that type of work, so removing, making safe, containing, you'd either need to engage a specialist subcontractor who has those insurances, or you'd take out a specialized liability or asbestos liability policy.
Sure. So I know you've made a comment here about engaging subcontractors. So your point there is, if you're going to engage subcontractors, you're trying to have a look at their policies and make sure the policies refer to exactly the work they're doing for you, if you want to have a meaningful way of reflecting the damage onto the contractor.
Yeah, that's correct. That's correct, because you are engaging, or you could be engaging, a number of subcontractors on any particular job. So it's ideal, although the policy does extend to include subcontractors under contract works, the whole idea is you want to be able to transfer risk to those subcontractors. So you want to make sure that they've got their own insurances in place for the required limit, and you also want to make sure that their business activities are matching what the business description is under those insurance products as well, or their insurance policy in place. Because you can have a particular subcontractor who does multiple different types of works, but might only have carpentry on their insurance policy. So you need to make sure that the work that they're doing matches what's on their insurance policy as well.
Yeah, all right, understood. Now, because we bring all the builders together and buy a group policy off you, so to speak, we're looking like saving substantial amounts each year for our builders. And there's an example here on screen of an average builder premium versus one of our members of our policy. So there's substantial savings there. But let's talk for a minute about when we're making application under the group policy, and I'm anticipating to turn over $1 million. Am I putting $1 million on the application form, or am I putting 500,000, or am I putting 1.5 mil?
Yeah, so I guess that's a kind of question that does come up a lot. Like, how do I know what to put down as my estimated turnover? So it's really hard to say exactly what it is going to be. And I guess that's the reason why a lot of these policies, or why the contract works policies premium calculation is based on an estimate. So when we calculate the premium, or when the insurer calculates the premium, they base it on an estimated turnover. And then at the end of the period, you do your actuals, which is basically the amount of works in a dollar figure you've done over those 12 months. So
but let's talk about the downside of either way. If I underreport, the downside is I've got to pay a top-up premium at the end of the 12 months. If I overreport, then I sit around waiting for a refund. Is that the way that works?
Because we adjust it based on the actual versus the estimate. If you estimate $1 million, as the example suggests there, and then you end up doing $2 million, you basically pay the difference to the insurer for what that $1 million of extra work is, or extra turnover is. If in the reverse side, if you only end up doing $500,000 worth of work, you do get a return premium, but all insurers, they cap that return premium. So on the Chase policy, it's 25%. Other insurers may have 20% or less. So ideally, or what I tend to advise, is that if you don't know, it's better to be on the conservative side with your estimate and pay the difference, because you're just paying whatever the difference is at 100%. Sure. Whereas if you overestimate, you can end up losing a little bit of premium in your return. If you end up doing you estimate 5 mil and end up only doing 500,000, there could be a substantial difference in premium that you're missing out on, or not getting back because of capping.
Understood. Always go for the top up. Yeah.
Yeah. Just on that point, I guess I'd make a complementary statement to that, which would be that we don't want people being overly conservative. If everyone's overly conservative, then it means as a group, our collective premium will be exponentially less, which means we will pay more for insurance as a group. So, if everyone turns around and decides to take 50% off their numbers and always try to pay a balance at the end, instead of reporting 60 or 70 million worth of bargaining power to the insurer, we'll be reporting 35, and the actual terms we get, well, maybe exponentially less, like poorer.
Yeah, that's correct. So the whole purpose of the group policy itself, using the estimated turnover as the buying power, because the way that the rates work themselves, the higher the estimate, the better the rates that the insurer offers at the end of the day. So the greater the turnover, the better the rates. So I guess it's just understanding that if you don't know, you want to be using an accurate estimate, but don't.
You're trying to make your best guess and lean towards the lower side of that.
Exactly right.
Yes.
Choose a range. Yeah. Now, clearly there's savings to an individual builder by participating. There's financial savings. Are there any downsides in being in the group together?
I guess the only downside would be if the claim occurs, that everyone could potentially be wearing the results of the claim. That would probably be the only downside as a part of the actual policy itself. But I think the benefits of the price saving can potentially outweigh that as well.
Sure. Yeah. All right. So it's one we need to be mindful of.
Yeah, exactly.
Very sensitive to claims. All right, good. So let's talk about a couple of other things. Cessation of work. So I see this was a live one, and Shane's referred us to another insurer's comments on this subject. You're saying our policy has some unique benefits?
Yeah, correct. So as the word suggests, cessation of works is when works cease on site. So and this can happen for a range of reasons, whether it's weather, whether it's delayed materials or contractors available or things like that. I guess a main one that's happened over in recent years would be the effects of COVID and COVID lockdowns. So how Chase views cessation of works is that if there's 30 days of consecutive cessation, they look to review the premium itself, but they're still on risk for the full maximum construction period. So when we look at that versus a standard policy or most insurance policies, they will have a maximum days of cessation of works, and then they'll come off risk. So that could be 30 days, 45 days, 60 days.
Do you just want to explain what come off risk and on risk means, I guess, to the wider group? Yeah,
definitely. So if a insurer comes off risk, it basically means there's no cover. So if an insurer has a cessation of works clause that's 30 days, if you have 31 consecutive days of no work on site and have a claim, there's no cover. So
and what are you saying our policy allows for?
So it allows for the full 24 months. Chase can't come off risk. It just means that they have the ability to charge an extra premium. But I've had lengthy discussions in relation to Chase about this, and they only really look to charge a premium in very extreme circumstances, to the point where I actually haven't seen extra premiums being charged for, 30, 60 day cessation of works, even 90 days. So it'll only really be, and this is like from them, that it's only really in extreme circumstances that they would look to actually charge anything extra. But I guess the key takeaway is that they can't come off risk. They just look to charge an extra premium.
Sure.
So that 50 days goes by, the house burns down, you go to put a claim in, they may turn around and come out and go, well, your premium for the year was $5,000, give us another $5,000 and we'll pay you the 600.
Potentially, yes, but that probably won't happen. It'll probably just be a normal claim situation itself. But I guess a note would be that if you know a job's going to be like going on for, or I guess going to cease works for an extended period of time, you'll just need to keep myself in the loop, because then we at least at the same time can keep the insurer in the loop and just keep track of it itself. But generally, from what the insurer is saying, based on discussions around COVID, they're not necessarily looking to charge premiums the moment that they hit that 30-day mark.
Well, that'd be a fairly challenging thing for an insurer to administer anyway, wouldn't it?
Or to prove.
Yeah, exactly right. So I think it's much more beneficial to have them on risk and have the potential to review the premium, as opposed to just automatically coming off risk and then trying to get the insurer to reinstate the policy or have a claim that's unbeknownst and things like that. So it's just something to be aware of, that each insurer views this differently, but I think it's a good benefit that Chase can't come off risk.
Yeah. All right, so let's just talk about best practice if a claim needs to be made. Something significant, substantial's happened on site. What's the dollar value you're saying would be recommended that you justify a claim initially?
Well, I think there is a need to look at, well, what can you wear yourself, but then also, I guess, what can't be worn. So I guess everyone's going to look at that dollar figure slightly differently than the next person, but it's I guess it's tricky to put a dollar figure value on it. I guess it would just be something along the lines of that you wouldn't be able to wear yourself, as opposed to a claim for everything at the end of the day.
I've always told myself 10 grand. That's been the magical number I've always had in the back of my mind. Is if it was something less than 10 grand that I can sort out and it's not going to affect anyone else, then you do it, because what it's going to do to your premiums in the further years, you'll end up losing it anyway.
Sure. Yeah. All right. So I've got a claim, for example, greater than $10,000. Any essential elements here on this page that need explanation, Adam?
It does depend on the type of claim. So if it's a contract works claim, so damage to the works itself, you just want to make sure that you're keeping all relevant records. So that's photos, costs incurred. If you need to make the site safe to prevent further damage, you're just keeping all of track record of all that kind of documentation and photographic evidence. A good way for administration is to create an individual claim folder or an expense account to keep track of those, so the expenses aren't being lost in the day-to-day expenses of the business itself. Or I guess liability claims where there's third-party property damage, just to engage as many witnesses that were available at the time, but generally the same type of business practices. Just make sure you're keeping all relevant available information that relates to the claim. And also, ideally, you want to report the claims as soon as possible to allow the insurer enough time, if they want to appoint an assessor, to review the damage or the loss at the time, as opposed to trying to piece things together at a later date.
Sure. Yeah. So accurate records are everything, of course. Okay. Well, let's just go to some of the other products that we've talked about but aren't captured in the sort of core policy, being our contract works policy. Professional indemnity, management liability, corporate travel. Professional indemnity would apply when you are providing design contracts or design work. Is that what we're saying here?
It could be in relation to any professional service or advice. So project management.
But thinking in a builder's context, sure. Project.
So if you're doing project management for an external project or another head contractor, that would be considered a professional indemnity exposure. But where we see it most commonly for builders would be in a design aspect. So if a builder is signing a D&C contract or a design and construct contract, there usually is stipulations or conditions under the contract that they've got to maintain professional indemnity because they're responsible for the designs, even if they are subcontracting those out. And I guess on top of that, there may be some clauses in there that you have to maintain that insurance for a number of years after the completion of the project. And that's because of the way that professional indemnity operates, being a claims made. So a claims made basically means that you have to have a policy in place when you're doing the work and also when a claim's brought against you. Because PI claims, especially design aspects, might not come to light until several years after or a number of years after the completion of the project.
Shane, did you have a comment on this?
Yeah, I was just going to say, so let's say a builder rocks up to do a site inspection for a prospective client, and the client says, what's some things I should do with this site? What's some things, giving free site inspections, and they go and make some passing comments about some things that they would potentially do. Oh, I think a retaining wall would make sense there. No, you'd definitely be looking at bearers and joists, or just general commentary a builder's going to be rattling off to, I guess, give confidence to the client that they know what they're talking about. Let's say they do or don't enter into a contract. Either way, let's say they don't. The client decides to go and own a build and follows the advice that was provided to that builder by that builder during that free site investigation, and it turns out the advice was not necessarily the most appropriate. Is that builder at risk of being sued for providing inadvertently professional advice?
It's a fine line, because I guess if you are providing advice, where usually it's advice based on a fee is where the main kind of trigger is. So if you're giving general advice and not being held to that advice, then probably not going to be held accountable for that, because it's going to be quite difficult to prove that you've given this advice, under under specific instructions or a fee or something along those lines. If you're just making a generalized comment.
What about a written site report, for example? Like some of our sales material does suggest that we will provide free site inspections and written advice. You know, should we then complete a site inspection report, send them some photos of, you know, some damage to their footpath and say, if we were going to work with you on this project, this is how we would approach it. And they then took that information, decided not to build with us, but generally relied on it. Is the fact that we haven't charged them a fee enough grounds to argue that it wasn't professional advice, or could it still be brought against us?
Well, I think if you're doing written reports, then you could potentially be leaving yourself exposed, because you're putting your professional knowledge down on paper and saying, this is what I would do, or this is wrong, this is how I would fix it. And then they take those instructions, and then whether they provide them to another builder or not, I think that you could potentially be leaving yourself exposed there. But it would be a very, very small exposure. And that's, I guess, I don't think a lot of builders would kind of take that upon themselves, or maybe unknowingly they do take it upon themselves. But
definitely unknowingly. Yeah, I mean, I've seen a lot of builders offering written, you know, site reports and, you know, general advice to a client. You know, this is the topography of the land. This is where you maybe should put your house to catch the northern sun, and so on, and things of that nature, which are often sales pitches. You know, come and see us. We will bend over backwards for you. And so I'm just wondering, you know, is the line not putting it in writing, is turning up and just talking to someone okay, but the second you put it in something that they can rely upon, that's when you're in the danger zone? Is that
would probably be more where you're in the danger zone, because if you're just giving advice in a general discussion, it would be kind of difficult to prove for that person to say, well, this person said or said this. It becomes a he said, she said moment. But the fact that when it becomes in writing and there's a bit of a paper trail, and you're providing that service to them, that would be when you would be more than likely exposing yourself.
Hopefully society doesn't become that litigious, Shane. Let's move on to the management liability cover.
Yeah.
If I'm a director of a company, as most of our franchisees are, and the director is sued for something, what's the extent? How much cover is here? Not so much in dollar terms, but am I covered for insolvent trading, or no, I'm not covered because I've broken the law? Where's the extent?
Well, there's a whole range of different, I guess, claims examples when we're talking about management liability, but the D&O cover protects the directors and officers' personal assets, and that could be from, as you say, from insolvent trading, trading itself, or misappropriation.
So it does extend to covering a director who's broken the law.
Yeah, correct. So, in some circumstances, so not all. There are exclusions under the policy, like all insurance policies, but one of the main kind of, I guess, claim examples that they do talk about is insolvent trading or misappropriation of trade secrets as well. So if you're a director and you're bringing in a new partner that's from another business, and they're bringing trade secrets along with them, and it ends up being intellectual property, and that other company ends up suing the business and the directors themselves for that misappropriation, then that's kind of where the management liability comes in, to not only look to settle the costs, but also pay the defence costs as well.
Yeah, understood. All right, corporate travel, is that something that's being taken up in our group?
Not in the last, 2 years?
Yeah.
No. Okay.
We did have it in the past, but obviously with COVID being the reduced travel and lack of ability to travel, there was some definite limitations on the ability to use it. So something to keep in mind though with corporate travel is a lot of policies were putting in exclusions relating to COVID related claims. So if flights were cancelled or things like that, then there was no cover, but there is starting to be emerging products that include that type of thing as well. So it does depend on who you go with, or if you have corporate travel in place at the moment, it's something to keep in mind as well.
Yeah, good. All right. Well, we're down to the last 5 minutes of our time, so I'd like to open up to questions at this point. Has anyone got a question they'd like to put to Adam that may not have been covered appropriately so far?
TJ's had his hand up a couple of times, but he keeps dropping in and out.
Can we unmute TJ and see if we can answer some questions?
You there, TJ? Oh, it's very quiet.
TJ.
Hello. Yes, Clayton. How are you?
Yes, I'm well, thank you. You're on the webinar. Have you got a question for our guest?
Yes, sir. Actually, I was thinking, how about after the call to be 1 million, that is our insurance, $4,900 for annum. If it goes to a little bit more amount, how would we calculate?
I didn't catch any of that. Did you guys? I heard the word cover. That was about it. TJ, would it be possible to get you to shoot off an email after this webinar, and we can get it onto Adam and we can get a response?
Yes, that's fine, sir.
Thanks.
All right, thank you, TJ. Has anyone else got a question? Adam, your closing comments? Anything else? Anything else you'd like to cover that I've cut you off on?
No, I think we've covered a good overview of the policy itself. I think if there is, as you said, for TJ and anyone else who wants any specific questions in relation to I guess specific covers under the policy or specific claims examples, then more than happy to reach out and throw your examples to myself, or we can just have a discussion, an in-depth discussion as well.
Yeah, good.
Fantastic.
Well, thanks again for joining us and for bearing with us with our renewal this year again. And
not a problem at all. Thank you for having me.
Yeah, pleasure. All right.
Thanks, mate.
Bye for now. Bye, everyone.